customized product, the best costing is a job costing, okay, or contract costing. So in this case, the standardized product, when you are producing for the continuous or repeated nature, cost tracking, exactly, here the costs are easily tracked because each and every job is unique. So what and all the material, labors, everything we are calculating separately for the specific job. When we are getting the debit side difference, no doubt, which is a gain. When we are getting a credit side difference, no doubt, which is a loss. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 2, Session 1, 4th semester BCom Costing Methods and Techniques. The chapter name is Process and Service Costing, and today my agenda. So the process costing, you will get to know the process costing meaning and definition, the process costing features, okay, and the application of process costing, comparison between job costing and process costing, and advantages of process costing, disadvantages of process costing, and how you're treating for the treatment of the process loss and gain in the process cost account. It's very important. Okay, and moving the first one, meaning of process costing. Process costing means actually when the standardized product, when you are trying to go for, when the companies like refinery or food and beverage sector, okay, there are a lot of process are involved for finishing the final product. So the first process, if it is completed, then it is going for the second process, okay. So the second process will depend on the first process. So here the process costing is a method used to determine the cost of producing a product in the manufacturing environmental, where a large quantity of identical product are produced through series of continuous, because actually the process costing, which is a completely based on the continuous process, will be going on. So here the large quantity of product, standardizing product they are producing. So here we are not able to compare with the job costing which is only for the specific job performing, okay. But process costing means actually when the large quantity, large product they are producing, the most of the time the manufacturing, okay, the repeated process. Here are some key points that provide a detailed explanation of the process costing. Any process, the material, labor involvement, other expenditure, okay. So how you are introducing how many product you going to produce for the first process, okay. So which is going for the carry for the next process. So here the definition, according to Certified Institute Management Account London, define process costing that form the operation costing which apply where the standardized goods are produced. Here we have the main focus on standardized product, not for customized product. Customized product, the best costing is a job costing, okay, or contract costing. So in this case, the standardized product, when you are producing for the continuous or repeated nature. Now the process costing features, what and all we can identify, no doubt it is a standardized production. The standardized production means actually when the companies like manufacturing, food industry, oil and refinery, okay, so the printing related, printing press, okay, everything. The process costing is used when the company produce large number of identical or similar product in the continuous production process, such as in the manufacturing of chemical, beverages and electronic components, the printing, okay. So which is there are number of processes are involved, right? So if you take example beverage grinding, and next one filling, packaging, there are a lot of process will be going for the final product. So here the divided into cost center. We know in the last semester you have studied the concept related cost center, okay. The each and every cost is calculated. The production process is divided into various cost center which represent the stage of production. So such as mixing, refining, packaging, okay, and so on. Each cost center is assigned a cost which is allocated to the product. So we know there are different types of costs are involved for the final product, producing a final product. So direct cost, indirect cost, okay. So there are different overheads also added here. And the accumulation of cost. Accumulation means what? Which is an adding of the cost. The cost of each cost center is accumulated for a specific period, such as month or quarter, then allocated to the product, because how many process will be passing the final product, how many process will pass, what and all involved. And the uniform unit cost, because we are producing a standard product, we need to follow the uniform. Okay, so here the cost of producing a unit of uniform, and it is calculated by dividing the total cost of production by the number of unit produced. Because here what and all you produce, you need to find out the cost per unit is very important. Either the material cost per unit or labor cost per unit, okay, or overheads, any other input, what and all involved for the production, we need to find out. Clear? Next, under calculations, cost, the calculation, there are different types of cost calculated here. So the cost involved in the production process include direct material, direct labor, and manufacturing overheads such as rent, utility, depreciation. Okay, so if anything want to produce, so which will pass the number of cost, right? Next, used to continuous process in industry, which is not for a specific one product they are not producing. So with the intentions to carry for the long period, or continuous process will be going on in here. So the process costing is commonly used to industry that have a continuous production process, such as oil refinery, chemical plant, and food processing facility. There are different types of industry. They are using a process costing. Each and every product are going certain. There are different types of process will be going. So obviously, which is a continuous basis. And where application of process costing are used, exactly where they are using a process costing. The first one, chemical and pharmaceutical industry. Chemical and pharmaceutical industry, there are different types of process will be going. Okay, so the chemical and pharmaceutical industry is one of the biggest user of process costing. There are different company, they are the manufacturing line, they are depending on the different process. Okay, so here the food and beverage industry, there are certain process will be going. So that's what the food and beverage industry. The process costing is also widely used in the food and beverage industry, okay, such as grinding, okay, mixture. So there are different process, right? So where the product are produced a large quantity used by continuous process, because they want to carry for the long period, you offering a standardized product. And the textile industry, even the textile industry also, they are using a process costing, because if you take a cotton, okay, the textile industry, from the cotton they are trying to remove the yarns, then which is going for the second process, twisting together for yarn. Next, which is going for assemble. Next, which is going for lubricant. Okay, so finally color. So there are different. The textile industry is another industry that use a process costing. In this industry, raw material such as cotton, silk are converted into finished product such as cloth and garment. Different process we are identifying. Next, moving to the oil and gas industry. Oil and gas industry, certain process are going. For example, the petroleum product, which we need to segregate the from the oil. Okay, we need to go for petrol separate, diesel separate, kerosene separate. So there are lot of process will be involved. So the oil and gas industry is a prime example of continuous production, which is not one time. Okay, so and the process costing used to extend you in this industry to determine the cost of production, producing a oil and gas. Lot of process are involved. Next, moving to the printing industry, also using a process. So they want to go for a designing and setting a paper. Okay, and if you then you have to frame the plates, everything in the industry, paper printing industry. Process costing is used to determine the cost of producing a print run. Okay, how many printer, the cost of each stage of production, such as typesetting, printing, okay, and binding and accumulated, allocating to the finished product. If the final books, whatever you are purchasing, so which is involved, a lot of process are involved, right? So next one, electronic industry, there are different components, or they want to go for combined assembly, so that is also different process will be going. So the electronic industry also used to process costing, where the cost of production of electronic components is accumulated at each stage of production. Okay, last one, beverage industry, we know there are different process will be involved in the beverage industry. The beverage industry such as soft drink, beer manufacturing, often used to process costing. There are different types of process we identified. Okay, moving forward, next one, comparison between job costing and process costing. So here we know the job costing will perform only for the specific job. Okay, the process costing which is going for the number of process. So job costing definition, the cost method used in the production process is unique, because only one specific product we are producing, which is nothing but the customized product. So one of the kind of product or service where the cost can be easily traced to individual job and order, because each job are unique, though that's what we are preparing a job costing. But in case of process costing method used when they producing a homogeneous product or service, okay, similar product, the standardized product, where the cost or average over the total number of unit produced. Next one, the type of industry, what kind of type of industry we can identify in the job. So the typically used in the industry such as construction, customized furniture making, printing, and healthcare service, which is different. And but in case of process, typically used to industries such as chemical, textile, food processing, and refinery, oil and gas, printing, okay, related. And cost accumulation, how you are calculating, each job is separate, right? So the costs are accumulated by the job, specific job or other order, and each job is treated as a separate entity. Okay, in case of process costing, cost is accumulated by the department or process, different department or different process. So, and the total cost is divided by the number of unit produced, how many under the certain process, or how many product they produce, divided by the total number of units. Cost tracking, exactly here the costs are easily tracked, because each and every job is unique. So what and all the material, labors, everything we are calculating separately for the specific job, and order unique and identifiable. But in case of process costing, costs are tracked by the department or process, it may be difficult to identify the specific cost associated with the unit produced, because a standardized product, the large quantity they are producing, so it's very difficult. But in case of cost accuracy, they provide more accurate cost measurement for each job order. Costs are directly traced by the each job, because each and every job are separate, different. Okay, the provide, in case of process costing, provide a less accurate cost measure for each unit produced, the cost or average over the total number of unit produced. So total product what you are producing, so definitely we are not finding the accurate, less accurate. But decision making, easily in the job costing we can take what either I am getting a profit or loss. Provide valuable information for the pricing and profitability analysis and resource allocation and decisions, which is related to now moving to the process costing, provide valuable information for the process improvement, cost reduction, and the capacity of planning decisions, which is related to the standardized product what you are producing. Moving forward, the advantages of process costing, no doubt we are finding a cost center, which is a allocated cost center. The process costing help to company to control cost by tracking the cost of each stage of production. Each stage of productions are involved a different process. So this allow the manager to identify area where the costs are high and take steps to reduce them. So unnecessary cost we are trying to avoid, using the same resource we are getting a maximum result. So next, easy to use. The process costing is a continuous process, so that's what which is easy to use and simple and easy to use for costing method that require minimum record keeping. So we need to maintain the track record. So the data analysis, This make it a ideal choice of small business and company with the limited resource. With the help of limited resource, easily we can track. But cost transparency, exactly we will get to know the cost per unit. So the process costing provide a high degree of cost transparency, as it is break down the cost of production into individual stages. So the different stages we are finding, so the which will break the cost of material, the cost of labor, so everything. So this allow manager to easily identify the most costly stage of production and take steps to reduce the cost. So what exactly unnecessary they are spending for the resource, so they can avoid. Moving for the fourth one, useful for standardized products. So which is a standardized product or homogeneous product we can say here. So the process costing is particularly useful for company that produce a standardized product of large scale. Okay, we are producing for large scale homogeneous similar product. This is because of assume all that unit produces identical, which is often by the easy of mass producing goods. Now moving to the fifth one, facilitate compare. We can compare easily what process. There are different processes, so comparisons will be easy. The process costing allow company that compare the cost of different productions run, so which can be useful for identify trend and making strategy towards the decisions which is related to setting the production related activity. So moving for the disadvantages of the process costing, obviously we can find out the limitations also. So here limited accuracy, we are not exactly, in case of job costing we can say accuracy level is more, but here is less. So the process costing assuming that all unit or produce are identical, which may not be case in the reality. This can be lead to inaccuracy in the cost calculation, particularly if there are significant difference in the material and labor required for to produce the different unit. So here that each and every product are something unique, so we cannot exactly give the result. And the lack of flexibility, yeah, once you adapted the process costing, there is no flexibility. So the process costing is well suited to the company that produce customized and unique product. Assuming that all units are produced identically, this can make a difficult to accurate allocate the cost and individual product because of finding the lack of flexibility, because we are using the standardized, right? So here inability to account for this wastage, the process costing assuming that all material and resource are used efficiently, exactly the material inputs what and all you are using for the production, which may not be always be the case. This is lead to be inaccuracy in the calculation and may result in the high cost of the anticipated. Here we can't predict. Okay, so using the input resource only we need to get, but here in this case it is very difficult. Moving for the fourth one, time consuming. Preparing a process costing, of course the time consumption is more. So the process costing can be time consuming, particularly if there is a multiple stage of production. If there is a significant difference in the material and labor required to produce a different product, because of the preparation is very difficult. This can make the difficult to company to accurate the track cost and may result in the delay of decisions making. So unless you're not preparing the process costing, the decisions we cannot take. So the limited cost detail, each and every stage the calculation of cost is inaccurate. So the process costing provide limited detail about the cost of individual components, which can make it difficult to identify the specific area where costs are high, because each and every process are involved different inputs like material, labor, overheads. Okay, so this can be limit to the effectiveness of the cost reductions effective effort. So of course we can't take up because of preparing which is any specific product is going for certain process, so the tracking is very difficult. Next, the treatment of process loss and gain in the cost accounting. The treatment, what exactly, how we are finding. So one is the manufacturing process, service process, and administration process. Okay, and there is the different types of losses we are identify. The treatment of loss, process loss. When the process is going, there are two losses we identify: normal loss and abnormal loss. A typical record to separate cost account and charge the product and process that incurred in the loss. So how, what exactly we are facing a loss. The treatment of gain, the process gain, increase the efficiency, reduce the waste, are typically record for the saving of reduction in the cost account and credited to the product and process by the achieving. When we are getting the debit side difference, no doubt which is a gain. When we are getting a credit side difference, no doubt which is a loss. And the service process loss, in case of service, customer dissatisfaction, because the process at the time of preparing the proper process we are not followed, the standardized process we are not followed, so of course the quality will be differ. So are the typical record of separate cost accounting and charge by the service or process that incurred in the loss. Okay, we need to find out the actual what is the loss value and gain value. In case the process gain in the service sector, improve the customer satisfaction, reduce service time. Okay, so there are typical record of saving and reductions of the cost account and credited to the service and process to the achieve. Okay, because we need to credit the value. And the administration process, the process losses, that is actually when the administration overheads, which is related to the administration overhead, errors, delay. Okay, and when you are writing, when you are taking planning or taking the decisions related, typical record of separate cost account and charge to administration functions or process that incurred by the loss. In case of treatment of gain, administration process gain, increase the efficiency, improve accuracy, are typical record to save and reduce in the cost account and credit to the administration functions to the process or process achieve to the gain. So here a lot of difference we are getting. And the normal losses, I just know I told there are two losses we have identified, two losses. One is normal loss and one more is abnormal loss. Normal loss is the unavoidable loss which occur due to inherent nature of the material or handling production process under normal condition. It is normally estimated on the basis of past experience what we already involved the production. So past experience of the industry, it may be in the form of normal wastage, normal scrap, normal spoilage, or defectiveness or negligence. It may occur at the time of the process. How do we find out the normal loss? Very simple. Number of unit of normal loss. When we are getting credit side, either in the question they clearly specified percentage wise or number wise. Okay, to find out input. Okay, into expected percentage of the normal process. For example, the processor we are introducing 10,000. From the 10,000, we assume 2% will be normal loss, means we need to calculate. So it's very simple. And abnormal loss and gain. Abnormal, we cannot predict, right? So which is an abnormal condition. Any loss cause unexpected abnormal conditions such as plant breakdown, machinery breakdown, and the substandard material. Okay, careless, accident. The margin allowed to normal loss is, for example, how we are getting the abnormal loss. When we are getting the credit side difference, okay, output and normal, the difference what we are introducing for the input for the first process. Okay, so obviously that is on the basis of the expected process industry in the normal condition. A slight difference are bound to the occur between the actual output of a process and anticipated. So we need to identify the difference value. So this difference may be positive or negative. Positive means no doubt we are getting a gain, or negative means which is a loss, abnormal loss. If it is negative is called for abnormal loss. If it is positive is a abnormal gain. Okay, we are getting the debit side difference, no doubt, which is abnormal gain. When we are getting a credit side difference, means we are getting a abnormal loss. If the actual loss is less than the normal loss, then it is called as a abnormal gain. So the calculation, how we can calculate value of abnormal loss, the total cost increase. So either it is a debit side, credit side, here which is always expecting a loss means we need to get a credit side different. So that's what the debit side value is more minus scrap value, which is nothing but your normal loss recovered value. Okay, if you subtract and divided by denominator input units. So how many units are introduced for the first process? Okay, and then normal loss unit, how many units are lost into unit of abnormal loss. So we are getting the difference of credit side, so we need to multiply here. And how to calculate the value of abnormal gain? Very simple, the same total cost of increased debit side. Okay, if it is increased credit side, the value is increased, so minus scrap value of normal loss divided by input units minus normal loss unit into abnormal gain units. Keep on watch for next section. Thank you.